China reopening, 1.4 billion Chinese who are raring to spend, invest and travel again. We know that, but could it unleash a second wave of global inflation?
Oh, absolutely, if they did come out and spend and travel like they were doing in 2019. But surprisingly, in the last few weeks, that doesn't seem to be the story. The Chinese consumer is being more cautious at home than a lot of people thought.
What do you think that is? Or what are you hearing?
Simple caution, the sort of thing that you'd talk about around the dinner table, you know, at home. Look, what we just went through, is this the time to lash out on a new car or whatever? And when we think about the tourism, you know, will we get those giant numbers back that used to lift Hong Kong and lift Malaysia and Thailand and all of that? Possibly not, because trying to get a passport in China at the moment is really hard for a Chinese citizen. So getting approval to come out, it'll be a gradual build, I think. We'll get some of it back this year, some in 2024. If we got a wave, it would just choke our facilities right around Asia. I don't think we could handle it.
Potentially be overwhelmed, understood. But okay, this less, I guess, enthusiastic than expected rebound in consumption in China. And I like the analogy you were using. A lot of it is down to basically conversations at the dinner table. I mean, how much of it, I wonder, is, you know, son, are you confident that you're going to be able to hold down your job or get a job? Let's say the boy's, I don't know, 19 or 25. And how much of it is also, you know what, it'd be nice to go on a holiday with you folks, but the house.
The house. The house is it. Okay, let's just go over the numbers. Yeah. Average Western family, the share of their assets invested in real estate is around 30%. Average Chinese urban family, share of assets invested in real estate is up at 70%. Way over the top. And we're looking at a market where the house prices are falling. So they're sitting around the dinner table saying, how far down are we going to go? And this is probably, if you had to pick the #1 problem for President Xi in China right now, it's to get a fix for that housing market. And they've been fluffing around with this for a year, and they're no closer to a fix yet.
Yeah. And it speaks to the structural issues and impediments in the broader Chinese economy. But what's the conversation sounding like at a board level, at a corporate level, and how would you characterize conviction levels?
It's really odd at the board level, right? Because the board level for multinationals, the foreign members we deal with, is outside of Asia. They're companies in Europe and the United States. There's been a dramatic shift. As I talk to our foreign members in China, they've flown back into the country from a board meeting in Europe or the United States, and I said, so what happened at the board meeting? And they said, well, not so much the board meeting, the investment committee, the committee that improves new projects. And they said, well, you know, for the first time I can remember, China wasn't on the top of the list. In fact, we were on the bottom of the list. So we've got this real challenge for people running multinational enterprises in China. They believe in the business they've got. They want to expand. They can see the market growth there. But head office in Europe and North America has just taken its foot off the accelerator and in some cases put its foot on the brake. How do they run their business in the next year is going to be a very interesting question.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.